Welcome to the Voice of Business, sponsored by the Greater Beverly Chamber of Commerce, which services Beverly, Danvers, Hamilton, and Wenham. This is John King, President of Headway Strategies, consulting here based on the North Shore, bringing you today's show. The purpose of the Voice of Business is to bring information about different business issues or related events to our area. I think you'll find today's topic particularly interesting because we've reintroduced a topic that's created much discussion and emotion over the last couple years, and that is the Affordable Care Act, also known as ACA. For today's discussion, we have two experts in the studio. We have Stephen Vesey, founder of Vesey & Weeks, a CPA firm that's been in operation since 1980.
Yes.
And we have Susan Weeks, who is partner in the firm as well, and she also serves on the executive board of the Greater Beverly Chamber of Commerce. Mm-hmm. Welcome. Thank you very much for being with us today.
Glad to be here, John.
Well, before we start, what I'd like to do is, Steve, can you give us some background on the firm? Because operating since 1980 is a pretty good track record.
It is, and we're quite proud of our firm. We're just not a nuts and bolts firm. We do a lot of other things that differentiate us from other CPA firms. And Vesey & Weeks is a branded. We've been out there a long time, like I say, since 1980, and we really we're a full-time operation. We have full-time employees. A lot of tax preparers or accounting firms bring in a whole bunch of people during tax season, then they're gone, and you have no continuity of services. So could you comment on some of the services we do during the rest of the year?
Our main practice is a tax practice, but we like to consider ourselves tax preparers, not just tax preparers, but more tax planners. Like Steve mentioned, we're there year-round. We don't go anywhere. If anything comes up during the year, we're there to help our clients and to also stay on top of things like ACA to let them know, what's coming up and how we can help them with their taxes so that they don't run into any last-minute surprises when it's filing time. Some of the other things that set us apart from other firms are, in addition to Steve and myself being CPAs, Steve is also a CBEC, which is a Certified Business Exit Consultant. And what that means is he's able to work with businesses that are looking to transition out of that business, either through an internal transfer or a possible sale to an outside party. In addition to that, I am a CGFM, which is a Certified Government Financial Manager, and that gives me a background basically in nonprofit and public accounting and also in governmental accounting. So from that, we've built a nonprofit practice that allows us to work with nonprofit organizations who needs tax prep and also financial statements. And then one other thing that separates us apart is that Steve and I are both CVAs, so Certified Valuation Analysts, and that allows us to go in and value a business for either an outside sale or also if there's any, gifting or estate tax implications, and also, unfortunately, through some divorce proceedings, if you need a business valued, we can work with them as well.
That's pretty full service.
Yep.
It is, and it's again, it's just not a nuts and bolts practice. We do an awful lot, and unfortunately, as Sue says, we do an awful lot of divorce work. So.
Well, I think if you have a family business, that would tend to play in there at some point.
Yep.
Sure.
It does. So let's talk about the ACA topic a little bit more detail. I know when you and I talked back must have been last October or November, you said it's really coming down. There's going to be some big issues for small businesses trying to figure out what that means.
Sure.
And I mean, all the play that's been in the paper over time, in the periodicals about the impact of ACA and how it's going to cost or what it's not going to cost or who's doing what to whom and all that, I think is something. So what's the key thing that I need to worry about or we need to worry about as business people about the ACA?
Well, the problem as I see it is that the government didn't do a good job preparing people for this. I think along the way there was enough chatter that this is going to go away. People really believed, I'm not going to take this seriously. They'll never go through with this. Well, they've gone through with this. And it's been five and a half years to get it to this point. And the problem is right now is that the mandate is that you're going to have health insurance. And if you don't have it, you're going to pay a penalty. They're calling it an additional tax, but it's a penalty. But if you're a small business owner and you have it, if the particular small business, you may be able to generate some credits. If you're a low-income person and you have health insurance, you'll be also entitled to credits. Unfortunately, there's all sorts of calculations and forms you need to go through to get to that. And that's where the confusion is going to come in. The other problem is that there are filing requirements now, or there's pieces of documentation that you never had to have before. When you go see a tax preparer, If you have a dependent child on your tax return, you need their tax return if they're filing their own, and that's a terrible.
Wow.
Because what happens is it's based on family income, it's based on a multiple of the federal poverty level of family income, so it's not easy.
Wow.
It's not easy.
Well, it's certainly. I'm glad both of my children are out of the house and
There you go.
and self-supporting and not dependents anymore. Although that's not good necessarily, but that's where they are. Well, let's talk about what qualifying insurance means.
Sure,
Okay, so-
I can take that one. So beginning January 1st of 2014, all individual taxpayers are required to have, they call it minimum essential coverage. And what that means is that you basically are required to have health insurance either through your employer, a spouse's employer, or coverage through COBRA, which could have been through your former employer, or any other types of government-funded insurance, such as Medicare, Medicaid, and also Veterans Affairs benefits. Otherwise, you need to go out and buy insurance through the marketplace.
Okay, and so where does the marketplace play into it? I know we have one in Massachusetts now that's just went through some jiggering around to
Yep.
get it to work.
Yep.
But how does that work?
So the marketplace is a way for individuals who are having trouble affording insurance go to a place to buy insurance at an affordable rate.
Okay.
There's a website that's very helpful. Basically, it's www.healthcare.gov. You go to that website no matter where you live, and then there's links to different states based on where you live, and that can take you to the Massachusetts Healthcare Connector or other states for health insurance.
So what extra record keeping do we have to have as individuals and also as business people?
I think the record keeping really falls on the business owner. The business owner is going to have to track out what's called full-time equivalents, or FTEs. That's the buzzword you're going to hear. And whether they're subject to having to provide insurance is based on the number of full-time equivalents they have. And it's a problem. And I think it's going to be a boon for the payroll service companies. If you have more than 50 employees or 100 employees, I can't believe you're not using a payroll service company now anyway. But they really you need to have somebody to come in and track out these full-time employees for you and the full-time equivalents, because it's not a flat so many hours times so many people. There's different calculations that are involved in it. So that's really, it's on the business owner. On the individual, right now in Massachusetts, since Governor Romney put his health care plan in, Massachusetts individual gets a 1099-HC.
Right.
We're used to that. You get that. You bring that to your tax preparer. That gets used in the preparation of your Massachusetts return. In Massachusetts, what's happened, though, over the last 8 years, I believe, is that it was actually cheaper not to have the insurance, if that's what you chose to do, and pay the penalty. What's happening now, though, is that that's all changed. The federal penalty is much more involved, and it's going to force people into this. So as far as the record keeping on an individual basis, really, you're going to get the form at the end of the year. But on the business end, that keeping track of the number of full-time employees is something that you really need to offload to a professional.
The payroll services, though, have stepped up and have addressed this?
Yes, they have. They've been prepared for this. I know we're very familiar with a couple of the members of the Greater Beverly Chamber of Commerce, and they have actually come to our office and done some, this is the impact that you guys need to be aware of.
Okay.
So they're on top of it, and this is going to be a big piece of their business, if not so much this year, next year.
Next year.
Because the thresholds change dramatically, and I will talk about that a little later.
Yeah. So then the forms that we got in the past, that the 1099-HC, that I got that in the mail the other day.
Sure.
Yep.
And so that's fine. Now you're saying that there's a new form that's coming out.
Yep. So the 1099-HC that you mentioned, as long as you have credible coverage already, you'll continue to get a 1099-HC if through Aetna or whoever your insurance company is. The new thing this year is that if you have insurance coverage through the marketplace, you're going to get a 1095-A. That document is necessary in order to prepare your tax return.
So is it the same type of format where it says, did you have insurance? I mean,
Yep, and it tells you how many months you had coverage for.
Okay.
There's separate rules on number of coverage, but as long as you had coverage for at least one day during any particular month, you're covered for that month. So something good to know. Two other new tax forms that you'll see this year are the 8965, and that tax form is used for individuals who are exempt. So if you're exempt for a particular reason, you'll get the 8965. You'll need that to prepare your tax return because it has an exempt certificate number on it, and you need that exemption certificate.
So how do I become exempt?
So there's different ways to become exempt. I don't know if you want to take that one. Or?
First, one of them is become an incarcerated Indian. That'll do it.
An incarcerated Indian.
Yep.
Okay.
We don't know where they come up with these things.
Okay.
But generally speaking, under the Massachusetts law right along, if you had religious beliefs against insurance, you establish that and not have to be subject to it. If you're out of the country, if you're living abroad, but normally it's really, you need to get coverage. It's pretty difficult to be exempt.
Okay.
Yeah.
But even if I were independently wealthy and I decided that I wanted to be self-insured and not fool with any of this,
Right.
I still have to pay some type of penalty or contribution,
Yes.
I think you call it.
Yep,
Right.
shared responsibility
Shared
payment.
responsibility.
Okay.
You will have to pay something.
Okay. Well, let's talk about what if you didn't have any coverage in as of last year.
So if you didn't have any coverage as of basically January 1st of 2014,
Right.
during the year, you could be subject to making a shared responsibility payment. One of the other forms that I didn't mention is Form 8962. That's new for this year, and that's the form where you would file for either a premium tax credit or to calculate your shared responsibility payment for not having health insurance coverage.
Okay. So the shared responsibility, that's a pretty involved calculation, or is
Yeah.
it something I can do with TurboTax, or do I have to really come to you and have you help me figure that out?
There's a lot that goes into it. One of the
Yep.
things that Steve mentioned that makes it even trickier is if there's an instance where you have a child that doesn't claim themselves, they're your dependent, but they want to file their own tax return, you need to get a copy of that in order to do your return,
Right.
to do the calculation. So it does get a little bit involved.
Okay.
Yep.
Well, so you talked about some of the things. You talked about incarcerated Native Americans, I think
Yeah.
is what
Okay.
you said. Are there other reasons for exemptions?
The religious one is something that has stood up in Massachusetts under the Romney health care, so that's still in there. And that's really the two main, again, if you're out of the country, but that's really, it's pretty narrow
Yeah,
as
and
far
if
as
you're-
getting the exemptions.
And your income has to be, believe the code is 8% of your adjusted gross income for the family household. If you're below that, you may qualify if your income is low enough.
Okay.
There are some low-income exemptions, but as
Yeah.
far as getting out of it altogether, that's what it is.
So what is the penalty? We've talked about the penalty.
Yeah.
We've talked about there is a penalty, but
Right.
what is the penalty in terms of what do I have to pay if I don't?
There's two calculations on it, but basically it's $285 per person, or a function of your adjusted income. It's a 1% it's a higher of the two. We have been getting some information in from taxpayers. Some taxpayers need to get their taxes done immediately because for financial aid purposes or whatever.
Sure.
So we've played around with this, been able to say, okay, if this particular person didn't have health insurance, what would the penalty be? Because we thought, Jesus, it's $285. Well, no, it's not. It's the function. It's that calculation because they were coming out at $384, $392 or
Yep.
something. So it's there. It will be going up over the next few years to the point where you really would not want to have not having insurance. It's important to have it.
So that adds some complexity to the process very
Yeah.
definitely.
Mm-hmm.
Very definitely. So what's the amount going to increase to? Do you have a sense of that?
Yep, so it increases from year to year. As Steve mentioned, 285 was the
That's the bottom
threshold.
number.
Yep, that was for 2014. In 2015, the 285 increases to 325, and then in 2016, that increases to 695. So it's being phased in. Also, the calculation based on household income goes from 1%, 2% to 2.5% by 2016.
Wow.
So-
Okay, let me ask this question. How stable, maybe that's not the right word to use, but how consistent has the IRS been in terms of putting this information out? I mean, does it keep changing, or is it pretty
Some things have
established?
changed. Once we get into the business side of things, certain things that were scheduled to take place in 14 are now being moved to 15. There's a couple of tax forms that we didn't mention that were slated to come out, and now they've pushed those off as well until 2015. So some things have
So
been
there have been
pushed
some
off.
delays as
Yep.
they've been pushed
So,
out.
so you actually got the feeling that they're pushing this out with the hope that they're going to throw it out.
Yeah.
Okay.
But that simply didn't happen.
I mean, I don't think it's going to go. Do you think it's going to go away? I mean, there's still going to be a need for health insurance for American.
There's a need for health insurance, and once you get health insurance and you go to the doctor and you're not writing out a large check and you may be paying a small copay, maybe that's a better way to go. I don't know, but I suspect once it's here to stay.
Yeah.
And as far as the penalties for not having it, this is it's a function of providing cost coverage
Right.
for the Obama Health Care Act.
Right. So it's a shared responsibility
There you
is
go.
what we're trying to do. So, okay. So if I have coverage, but I pay a lot based on my income, it sounds like I could be eligible for not really eligible for a credit, though. I really can't get a credit out of this.
You can. What happens is this. The second part of we've talked about the punitive action of it.
Yep.
If you don't have it, here's what happens.
Right.
But if you have coverage and your income is on a lower level, there are credits available. And the credits are tied to the federal poverty level, and it starts out at 133% all the way up to 400%, and the credits can go up to $1,250.
Yep, $1,250 for an individual, and then $2,500 up to $2,500 for other filing statuses.
Okay.
But you have to apply for them.
Right.
And they're refundable. And what this may fit into is a lot of people in lower income levels with dependent children. Right now, they get earned income credits because of their income levels. Well, now, if they are paying into some sort of health insurance, they will get a credit based on their income level as well. So it's an enticement to people who just, I don't know any taxes, why pay? Well, why file? Many times we find people, they owe nothing, but if you file, you're going to get this earned income credit and now possibly the health credit.
Okay. Well, that sounds like there's some incentive to file anyway to get the credit.
Exactly.
So we've got two pieces here. I think one is the individual and all the things that you have to do that. But then there's the business person, and the business person, as I understand it now, really has that record keeping to worry about in terms of how many full-time equivalents they have and what potential liability. Is it a liability that they have?
There is. We were just talking about this on the way over. What the maximum penalty be. Once we get into 2016, it is
$2,000 per employee. The first 30 employees are basically excluded from this. So what this means is if you're an employer with 110 employees, you don't offer health insurance at all, you could be subject to a penalty of $160,000. So your 110 employees goes to 80 employees because you get a 30% waiver. Times $2,000 per person gets you up to $160,000 of a penalty.
So is that well known to the business
I don't
community?
believe so.
No, and this is the problem, the lack of communication on this.
Right.
Because every year they kept pushing it out. And for instance, right now, the impact of this are businesses with over 100 employees. Well, it was supposed to be 50 employees, but they pushed out the 50 employees to 2016. So again, business owners have a tough enough time keeping things going as it is.
Right.
I think the majority of people say, they're never going to do this. Well, they've done it. Well, they keep pushing it out, so maybe they're going to cancel it. Well, they're not going to cancel it.
No, I suspect they're not.
They're not. And this is, so the impact to a lot of especially a lot of the members of the Greater Beverly Chamber of Commerce is maybe not a lot have 100, but a good number have over 50.
Right.
And so maybe this year they're, okay, we don't have to really worry about this, but we should really talk to our payroll company, get the FTE calculations out. Are we going to be subject to this? And then when it kicks in 2016 for the 50 to 99 employees, you'll know what you're doing.
So it sounds like a mitigation strategy is make sure you have a good payroll company.
Yep.
If you've got in that range, and secondly have a good CPA firm that's going to take a look at what you got to do to make all that happen.
Yep.
Yes.
Right? Know what you have to do there. That's an extra burden on the small business guy.
It's an extra burden on the small business guy, but the businesses, businesses will just pass it on to their customers. It's the burden falls on the people who can least afford to pay for this. And this is something that Susan and I have talked about, we feel pretty strongly about, is that in our firm, the people that are going to have to file these extra forms and potentially pay higher accounting fees, we're not going to charge extra for these forms. It's just not the right thing to do. So we have clients that are going to be subject to these extra forms, and maybe ordinarily it'd be an extra $75 or $100 on the fee. We're not going to charge them that because it's enough. Enough is enough.
Yeah. Well, that's great. I hope it works with your business model and that,
Yep.
because it certainly builds some customer retention on it, I would think.
Thank you.
So if we go back to kind of summarize where we are, I need to have insurance individually. If I'm in a business over a certain number of people, I have to make sure I provide some level of insurance for them, alternatives for them.
Mm-hmm.
Maybe I don't fund it, but I have to provide it for them when they go to the exchange. Is that right?
Right.
Okay. So I have to worry about that, and I've got different rules for different years. So 2014, I probably get by with where I am, but 2015 and 16, I really have to spend some time thinking about what that's going to be and the cost to me as a business owner.
Okay. That's a good summary of it. And then what we haven't really talked about is the small business piece of it. The rest of the members of the Greater Beverly Chamber of Commerce, the smaller businesses with 11 employees or less, they're impacted in a totally different manner, and where they're encouraged to, they're exempt from the penalties, and they're encouraged to provide insurance for their employees. And the range of values here is the problem, I guess I'd say, is that in Massachusetts, the average wage is a lot higher than it is in Texas or whatever. And there's a national limit on the wage, so to get the maximum credit, you'd have to have less than 25 full-time equivalents, less than 10 full-time equivalents, and their average salary can't be above $25,000. That knocks a lot of people right out of the box. Right. It'll extend all the way up to 25 employees and $50,000 average salary. So just because you're a small business and you've got, maybe a graphics design company with a bunch of people making $35,000, they're going to be subject for something, not the full amount of the credit, but they'll get something on it.
I think the interesting thing about the small business health care credit is it's not new. It's been around since 2010. So, Steve went through and mentioned the guidelines. It did change slightly. In 2014, you could actually get a credit up to 35% of the health care premium that you pay for your employee, as long as you're covering at least 50% of the cost. That actually goes up to 50% for 2014. And the one kind of caveat for 2014 is that in order to get the credit, you have to offer health insurance through the shop. It's something kind of new that most businesses might want to know.
Through the shop? Is that the exchange?
Nope. So the shop is different. The shop is actually, it's the Small Business Health Insurance Option Program.
Of course.
And, and it's a way for small businesses who have 50 or less employees to go out and buy health insurance without going through a broker.
Okay.
And so in 2014, if you follow the guidelines of 10 or fewer, $25,000 average wage, or up to 25 or fewer with $50,000 average wage, you may be eligible for a credit as long as you have the insurance through the shop and you're providing at least 50% of the coverage for those employees. So that's kind of a tricky calculation, but that could go into, to effect and offer businesses some incentive.
Wow. So it sounds like we need a third category here. We talked about the CPA. We talked about the payroll company. You need a good strategist as you're sitting there putting your numbers together in order to figure out what your business costs are going to be, because they're not like they used to be.
I think that's where the tax planning comes in.
The tax planning comes in, and even we're talking this morning at a meeting about sick pay. The bill that passed last year that kicks in July. Over 11 employees, you're going to have to be sure you get 40 hours of sick pay available to them. So what this does, and I think we've seen it now with the economy coming back the way it is, it's been pretty much a jobless growth in this increase in the economy. If you own a company, you've got to think long and hard. If I have 48 employees and I want to go to 52 or 54, I don't know if I want to do that, or if I'm going to do that, I have to rethink my whole pricing structure.
Right.
So there's a lot involved, and it's almost regressive if we're trying to recognize the fact that small business is responsible for the majority of jobs in this country. And we've created a situation now where small business owners may not want to hire more people because now they're opening up themselves up to this.
Well, they're adding more cost that they have to pass on their customers and may or may not be able to compete.
Right, it's a real problem.
Yeah,
it's a real problem.
That is a significant issue.
Yeah.
Hopefully somebody will recognize that and offer some different credits or something.
Right.
But it is a bit of a challenge. Wow. Well, this has been quite an interesting topic, and I really hope that resonates with a lot of the members of the Greater Beverly Chamber of Commerce, because I think that clearly some messages that we came out here are, you need to have some good planning for taxes, you need to have some good planning from business in terms of what the costs are going to be, and you need somebody to support you with the payroll side of it as well.
Right.
Years ago, I did a lot of work in information technology, and one of the things I swore I would never do was have payroll, because I did payroll when I was in college as part of a summer job, and I said, okay, I'd like to have somebody else do that.
There you go.
So that's where we are. So that's great. I really do appreciate you coming in today and spending the time with us on the Voice of Business.
Thank you for having us. We want to give you a little gift here, John. It's a cell phone caddy. You set this on your desk, and it's our form of. Remember, we're an accounting firm, so we're not great marketeers, but it's a cell phone caddy. Put your cell phone on your desk, and
Wow,
Enjoy.
That's great. I can do that now. I got the smaller cell phone; it fits on there.
There you go.
I didn't think this was a beach chair for me because I didn't think I could fit into it. But do appreciate the gift. One of the things that we talked about when we did the first show for Voice of Business was really the idea of a program that we started at the Greater Beverly Chamber of Commerce called #KeepItLocal. And that program was designed to encourage people to make their purchases local in the Greater Beverly Chamber of Commerce area, just because that helps local businesses. And you are a local business, right? You're a local business. You've been here since 1980.
Yes.
You haven't moved in from somewhere or gone offshore or anything like that. So remember Vesey and Weeks when you talk about local businesses for that. And also, I'd like to just make sure that other local companies, if you think about that, the listeners think about that, remember #KeepItLocal. There is an emblem that's on a lot of the stores. I don't know if you have one in your office or not.
Yep.
Excellent.
I'm
I bet you did. So that's good. So you know who's participating in it. So with that, I'd like to wrap up our section and say the next time on The Voice of Business by the Greater Beverly Chamber of Commerce, we thank you for listening, and we would look to see you again. Thank you very much.
Thank you.
Thank you.